Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, David White.
And welcome to another excellent edition of the Power Trading Hour, where we come to you at the appointed and sacred time.
The following takes place between 2 p.m. and 3 p.m.
So what do we have going on today? Well, after the huge move on Wednesday, generally want to see a follow-through day with additional volume and a nice-sized candle. We've now go 2 days. And to tell you the truth, the question is, did all or most of the money for fund buying come in on Wednesday and everybody just chased it? Certainly the news wasn't good today. We're about a week away from other big numbers, which will probably be more bearish than the numbers we got this morning. Then we go into the 13th and 14th of the month with the Fed meeting. And I think a lot of people are going to be disappointed. But in the meantime, could they kind of hold this market up? Far too many people thinking and saying the exact same thing always bothers me. And they're all kind of looking at everything as if it would be perfect. Really do not tell me how lower earnings and higher PEs next year turn into higher prices. Why, some stocks can go to the moon. Those are generally played by a handful of folks. When you need the indexes to go higher, you need a lot of people getting involved. And my guess is that, especially with a lot of the higher stuff, we're probably going to have people dipping into retirement accounts to start making do. And this is not very different, at least in my opinion, than the 1999 Christmas season, where everybody all thought that they were going to be able to all sell the day after the new year and avoid higher taxes. I think it went from like 32 or 35% to 17 or 18. So everybody was holding on, thinking that even if it went down 10%, they'd still be making more money. But of course, we got clubbed really as fast as anybody could sell into it. It was problematic. But everybody, I think it's a Jesse Livermore thing, and I'm trying to remember what he said, but it applied to a bunch of things. Let me see if I can actually dig it up. Okay. Let's see. I'm pretty sure he called them suckers. Let's see. The big men of Wall Street are prone to be wishful thinkers, as politicians are the plain suckers. In a speculator, such an attitude is fatal. But I did remember that he called them suckers. And he was pretty good at being short. He wasn't always short. In fact, he made a lot more money being long. It's just that he was more famous for making a lot of money in the 1929 blow-up of the stock market, where he made about $300 million in about 10 weeks. And it was pretty funny because if you read through his book, he was manic depressive. Both his mother, his father, and one of his sons eventually committed suicide along with him. They had a problem in the gene pool there with that. But today he probably would have owned the world with a little bit of lithium and maybe some better drugs to keep him on an even keel. When he was doing fine and didn't go off the deep end. Anyway, the point of the whole story was his wife was so used to him making a couple $100 million, buying her a ton of stuff, and then coming to her and saying, hey, we got to, you've had that stuff for about a year, all those diamonds and stuff. Well, we need to sell them. We need to sell the house. We need to sell the yacht. We need to sell the cars. We need to sell the furs. We need to sell everything. And, in a couple of years later, they'd be back in the same thing. But he wasn't kind of happy having a lot of cash. His wife at the time, much smarter. But anyway, it was kind of funny because there's a story in there right after, probably late October or 1st of December of 1929, of him coming in and says, I've got to talk to you. And she was starting to go grab all the diamonds and pearls and furs. And she said, well, yet another time of feast and famine. And he says, no. There's nothing like that. We actually are worth about $300 million right now. And I mean, $300 million today would be something. Can you imagine starting the depths of the Depression, but you having $300 million then? My word, would you be king of all you surveyed? But there's about 3 or 4 things that go into that, and there's some other writings in there. But I always found it interesting to find out that politicians tend to be the biggest suckers. I had a bunch of emails this week about what's going on with CNBC and Sorkin and who's the ABC guy that used to be in politics. He's about 5'2". Can't remember now. Anyway, a handful of these guys all diving in to try to save this guy from FCX. And I told those folks, and I'll tell you again, we talked about it maybe a week ago or 10 days ago. I said how important it was to understand if you got money out just before everything collapsed, that bankruptcy courts can come back and get it from you. So just be very aware. Well, what this is all about now is, of course, these guys gave money to a lot of politicians, and none of them want to give it back. So they're more than willing to go to their minions, like Andrew Ross Sorkin, or there's the guy Stephanopoulos, or the rest of these guys. They're all going to duck and cover and do anything they can, because the last thing they want to do is have this thing actually called a fraud, and then have the bankruptcy court come after them for any money that was dispersed. Now, depending on where it was done and internationally, they can go back 3 months to 6 months, which would certainly hit a huge amount of this. So if you're wondering what this is, and yes, there's corruption in politics. I'm shocked. This is my shocked face here. But they're not so much as shocked as not willing to give it anything back. So they'll go to the usual suspects that they can count on to try to cover this up. Nothing to see here. Please move along. The problem is who gets assigned this as a judge and who works on it. But if they do the right thing, we talked about how Kevin Bacon, the actor, got involved with the Madoff deal. All these guys had to give cash back if they got it within a year of it going bankrupt. We'll be back in a minute.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors. Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
As we sit on the markets, we're still down just 22, 23 points, which doesn't sound like the end of the world. But again, I'm more worried about the pattern that it is setting up, which is no continuation. I'd give it probably into Monday. Maybe we'll have something before the end of the day. But generally, about 80% of the time, if you don't get a continuation within 3 days, generally that is a confirmation, like I said, about 80% of the time, that what you had was a buying climax in Wyckoff terms. He was a big deal. Same thing around the same time as Jesse Livermore. He had what became the Wall Street Journal and had people come into him and tell them all kinds of ways to get rich at his newspaper. And he picked up some stuff from them and other things from other folks and kind of had an amalgam of something that worked fairly well for him. He was a big deal. Okay, we'll go to the caller. We're going to go to John in Columbia. How you doing today?
Hey, Dave. Appreciate you taking my call. You doing all right?
I'm doing fantastic.
While you're on your fundamental tangent here, I just had a question. What do you think about Apple? I'm looking at this going, you know, the new 14 is basically the same phone except with some more memory. Is that right?
You ever had exotic cars or hot rods?
No. I've had some pretty nice cars. I wouldn't call them exotic, no.
Okay, I'll tell you a story because I raced. You get a car, you get it all ready to go, and you go take it down to Daytona or Homestead, and you want to race an endurance race, so you buy your car, right?
Yeah.
And you can probably average 190, 195, maybe 200 mile an hour around the track on the ovals.
Okay.
A little less on the inside. How much more is it going to cost you to go 202 miles than 200 miles an hour?
Okay, gotcha.
It's not 20% or 50%. It's 100%, 200%, sometimes 300% to get that last percent that's going to get you to win the race. And that's where things really get expensive. And when you get something that is already fast and good, how much more does it cost to make it just 1 or 2% better? If it's a pile of crap,
well, now,
like
if
I
you're
remember my
win a race
1970
worth $1 million, yeah. But if you're going to sell phones where the user probably doesn't even really notice that, maybe not so much, right?
I'm just going to say that how much better is the camera going to be? How much better is the interface going to be? Steve
Not
Jobs
to probably notice. That's
the problem.
So
again,
here's my question. So I looked this up, and Apple gets 40% of their sales from Europe. Okay, you got a bunch of people over there going to have trouble paying their electric and gas bills this winter, and with the phone, this really not much doesn't have any new real features. I'm having real trouble seeing how all these people are going to be run out buying this new phone. Now, the analysts have cut back estimates, I see, due to supply issues out of China, but I think that's just sort of covering up. They haven't even really addressed the demand problems that I think they're going to have just because of recessionary issues and especially the problems Europe's having, just like you were talking about there a second ago. So I'm looking at this thing with a 24 PE, which implies a 12% growth rate, and I'm saying that ain't going to happen. It's just they ain't even going to be close.
I'm saying that it probably stays somewhere around this price or much lower, at least for me going forward in the next year. And that would be kind of along the line that you're talking about, but also along the history of technology companies that stagnate. Right. Is there any company or is there any product that Apple has that has more than 1% or 2% of the overall revenue, let's say the net revenue of Apple, that was designed before Steve Jobs left?
Well, yeah, you're right. Exactly. Yeah.
There hasn't been anything new. Even the ear pods were something that he put on. There literally hasn't been a new product. Now, Apple, of course, bought a huge amount of land and hired 3,500 engineers to make all kinds of new stuff. It really had never hit. They also tried to put their thumb in the eye of Qualcomm for a long time and get into a turf war in them. They kind of acted like Walmart does to a small supplier, just assuming that they could run them out of business.
Yeah.
And that was always something. The idea that, you can do that. In fact, Apple's run many companies into bankruptcy. The one that was going to make the sapphire crystals for the watch, which again is, I think it's like 1.5% of all the profit they make comes from the watch. I mean, it's just infinitesimal. Even though they sell these things, they don't sell anything approximately. The best news that Apple's had in the last 5 or 6 years is being able to sell those earbuds, which cost them about 30% or $30 or $45 to make, and they sell for $200 or $300. Now that's really kept them above the line and kept their head above water, or they'd probably be $80 or $60 by now. So there is, any one of these things that they can fix might actually change something, but just getting rid of Qualcomm and them not having to pay money to Qualcomm, not going to do a whole lot for them. Yeah. Although that's what they're spending a lot of money doing that, saying that we won't use your chip anymore. It just was probably never worth it. It was kind of a ego trip for the current CEO to run around and crush anybody else that didn't give them the price that they thought they wanted.
Right.
So,
I think no doubt they'll sell a lot. They'll sell a bunch of these phones. There's no doubt. But I just read that the wait time right now to get one is 30 days. So that puts you out past Christmas. And, there's probably a lot of people at the end of the year buying for Christmas presents and stuff, maybe. But I'm looking at this going, I think they'll be lucky to sell 80% of the phones that they sold in, 2021 was the big booming year. And I'm thinking, man, people, especially in Europe, those people are going to have to be troubled buying much of anything extra. If you got a phone that works fine.
Can you hang on through the break?
I don't see it.
Can you hang on through the break?
Sure.
Okay, we'll be back in a minute.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
And we're back from John in in Columbia, South Carolina. How far is that from Greenville? How far is that from Greenville?
Greenville, about 90 minutes.
Okay. Yeah. I haven't been in much of South Carolina other than my brother's graduation circa late 1970s in Greenville, South Carolina. Anyway, one of the other things I was looking at, some of the people in tech are discussing for Apple, is its contract to supply phones first to the phone companies that they can then sell. Yeah, that they can then sell or give at a discounted price, right to the
Verizon, AT&T and company.
Right, and they give them a pretty nice sweetheart deal compared to the retail product. Of course, if they sell retail product and it goes, it's not in that chain. Best Buy actually sells a great deal of those over-the-counter phones. Let's take a quick look at them. They've been going higher, and that may just be that they don't have to discount those. There may be some other stuff. Of course, it's Christmas. They tend to blow up right after Christmas anyway. I've gone by Best Buy. I haven't seen that much business, but again, that may be more than that. But that was the last thing I had heard, that they may actually get in it. Now, from the news reports of the last day or two, it's been that they've been canceling a great deal of the less expensive phones. Trying to manufacture as much of the most expensive phones that they make the highest margin on. And that's probably a pretty good idea, but that's also going to cost them overall dollar revenue amounts. I don't see a lot in there that says that this is really great for them. I think they have a lot of reputational issues in that, their phones, some of their phones are made by slave labor, and everybody knows it. So, there's a reason why the riots started at the Apple Foxconn facility.
Exactly.
That one is not a one for slave labor, but it's probably pretty darn close.
Right.
So, but there's some of the parts do come from there, and of course, no one's allowed to go in and see those folks. So, can some of those things, you never know when they're going to actually matter. I mean, Apple is one of those companies that gets a pass mostly because of its beliefs or views on U.S. domestic policies.
Right. And so I heard they're scrambling to get some production up and running in some other places, but it might be a little late on that move.
Well, the one thing that most people aren't bringing up that I brought up for the last year is that half of the manufacturing or the assembly has already been moved to India. But
I didn't realize it.
Yeah, but not the components. Right? And that's where the real problem is. It's not putting the things together. But one of the reasons why the assembly plant in China is getting so many people riled up is a bunch of them have lost their jobs already. And now they're closing the plant down for COVID. I mean, things in those areas are fairly bad. Right? And so it's no different than here in the United States when everything goes to hell in a handbasket. People start getting upset. And they've been,
and I think that's definitely coming next year. I think people are overlooking this. I think there's going to be big problems next year. That's just my opinion, but
I certainly think that PEs will probably come back in line, and I think we've avoided that at the moment. If you heard my comments at the top of the hour. I'm thinking that Wall Street tend to be suckers. Along with the politicians, and that hasn't, everybody thinks that because we have a lot more technology, that human nature has changed. And I think if the Bitcoin stuff and FCX of the last few weeks has taught us anything, is that human nature doesn't change. It hadn't changed since the beginning of recorded history. Even though we know a lot more, people fall for the exact same thing over and over again, and then it starts all over when a bunch of people die off and new people come along.
From what I've read, SBF pulled off the same thing Elizabeth Holmes pulled off with Theranos. I mean, I don't see much difference there. I mean, I think there
is kind of a difference in that she didn't go loot the company.
I know she had a product she was working on and trying to get to market and never did, and ended up faking it. But as far as pulling in all the political actors and stuff and getting them on her, he kind of did the same thing to kind of.
I always on this subject, I always love Chanos's comment. CHAN, Chanos. OS, right? Chanos.
Which fund is he at?
I can't remember the name of it. But I always love this quote from him. In tech, if you're perceived to be changing the world, it's okay to lie to investors. I always thought that was one of the more important quotes that I should remember being in tech, too. But
that's kind of what I was thinking when I linked those two together.
So, I tend to go through in the morning every day, reading a few at least of the quotes to make me think and get me thinking, and maybe get me off a little bit of my dogma. But like I said, human nature doesn't change. Everybody thinks that they're smarter than everybody else. And that leads me to another quote that I bring up a lot, and that is from Neil deGrasse Tyson. And that is, a lot of people think that they're smart enough to be right, but they're not smart enough to know they're wrong. So we got a lot of people that are just smart enough to think they're right, but not smart enough to know they're wrong. And that's kind of it. So anyway, interesting setup. I don't see a lot changing. I don't see any hint. Now, maybe they got something. I don't see any hint that they've got a new product.
Right.
So,
and when they cease to be a growth company of new products and stuff, and instead of a PE of 24 I'm looking at here, going to be looking at a PE more about like 14 or 15, and where's that going to put the price? Way lower.
I'm thinking about $80, but that would be me, about 87.
Sometime next year, no doubt. That's my thinking.
But that would depend a lot on them not diversifying the parts part of the business. I think they've done well to diversify at least the assembly part of it and get that out. But everybody always talks up the current CEO at Apple as being some kind of genius, and I think he's probably good on dollars and cents. But I always look at tech companies as kind of like Star Trek. You had the guy that would take the chances and the risks, and then you had the guy that would play it safe and figure out the odds on everything and not really take any risks. You had Spock and you had Kirk. You really needed the Kirk, you really needed Kirk, and all you got is kind of Spock there. We'll be back in a minute.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
And we got a few emails in. Of course, you can always email me at path@tfnn.com or call in, as the previous caller did, at 877-927-6648, as we see a market kind of treading water here as we go into the late Friday afternoon. Of course, first thing I wanted to always look at is what kind of volume we have. A little less than we had yesterday, about 6.9 billion shares, so it's going to be a light volume Friday. I do suspect they're going to try to continue to put this market up higher in the short term. I think it's going to get clubbed come next Friday on the next PPI numbers. But that's just me. I think a lot of people are way over the tips of their skis on the economy at the moment. Anyway, some good questions out here. Any comments on the B-21 being rolled out today? Any tech and defense benefits? The original B-1 had a lot of issues. It kind of rushed to market also. This one is one that has been made a lot better. A lot of new materials that are much better for deflecting radar, that kind of stuff. So just as a 2.0 version of this, but also with the hindsight of putting together a lot of those putting those planes together by hand, and these being more engineered. Is there a big difference? The Northrop Grumman plane, you look for a down day out here and you got Boeing up. I think that tells you a little bit about what people are looking for and starting to get a little nervous. Now, Boeing may be more about home travel too, so a little tough to sort that out. But any tech and defense benefits, certainly on benefits, it is a plane they can fly much more. One of the problems on any plane is the amount of maintenance and parts that it takes to fly every single hour. And one of the things that they asked for in this plane was to get that price down a great deal. You can have, again, my discussion earlier about buying a race car that goes 200 and then wanting one that goes 202 and finding out it's 300% more. That's kind of the point of the B-21, is to get one that will do the same job and maybe go 98% as fast at a whole lot less money. But those things are very interesting. If you see them in the air while you're in the air, absolutely scary because I was flying over Whiteman Air Force Base a number of years ago. If you don't know, they're all based there just east of Kansas City at Whiteman Air Force Base. And just spooky as all get out to watch those things fly in the air. And of course, I think it was before 9/11, so I didn't get quite the the reception probably would today. But to see one of those and then a B-1 flying at about 100 feet off the ground and then a bunch of F-16s chasing it, and me putting around in, I think, a Cessna 172, was very interesting to be in the air, the same air as those guys are, and just being told to not do anything stupid as all these guys went by me. But it was one thing about being on an air show on the ground, another one being right in the middle of it. But I'll always remember that day. But I was traveling across the country. I think it was flying to Colorado. But it was pretty neat. 877-927-6648. And for those people, I know there's a couple of people that have emailed me about the tragic crash of the B-17 and the P-63 down in Texas. The preliminary report was out yesterday. So if you're really interested in what caused that, they probably you didn't really need the FAA to actually, or the NTSB to actually kick that out. I think everybody kind of knew pretty quick. And yeah, planes gone, humans gone, and all for nepotism, if you get my drift. Anyway, that's one question here. Okay, the other ones. Okay, we get to that, we'll get to this one. Okay, SCCO. Come on. Here we go. Southern Copper. You had a nice gap higher and move higher. And this is a lot like the energy companies right now. And that is, if you have anything that's digging in the ground, whether it's copper or iron ore or anything, or oil, the current administration don't want no more of that. So if you've got something, it's worth a lot. Unless they succeed at putting you out of business, if you got it, it's kind of like having a house on the beach. They're not making any more beachfront property. It's probably only going to go up. And as long as the current administration doesn't want any more drilling, excavating, or any of that here in the United States, I think anything that actually has producing mines are probably going to do extremely well. So hard to think that this doesn't go up and at least test the 63.95, and probably, well, we didn't look at it. Let's look at the XLE today. It's very tough to think that these, why they may get a little bit of a pullback. I think that you're basically talking about monopoly power in a lot of these areas if they're not going to let anybody drill or mine or do anything else anymore. Anything that actually is producing is worth a whole lot more and a virtual monopoly. So we'll look at that. Okay. I think that gives a couple of questions. I had a question to look at UNG. And let's see. It certainly looks like you're back down. I mean, the long-term pattern on this, I think, is fairly good for being long. You don't quite have a inverted hammer here today. You're probably not going to get it. Maybe you get another inverted hammer in the next couple of days, but it's hard to believe that natural gas isn't going to be a big deal. Again, you get enough cold weather and this will turn around. As I've said over the last few weeks, you really just need to be watching the Weather Channel to trade this, and when everything turns bitterly cold, this will turn around. We'll be back in a minute.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come into the end of the day, do we come up and just end up closing flat on the day? We could. Again, fun buying. They got to spend the money. Whether or not after the morning session on Monday, they continue to throw more money at the market, I think that's going to be much more indicative. But generally, this is about as good as it gets. After a 1.5% average pop for fund buying, you get generally a 0.75% pullback overall in the S&P after it's over. The market's, for the most part, it's going up a little higher. Not uncommon to see a pullback. As I said, I think, as much as everybody wants to get bullish, as much as everybody's saying, well, tax selling is over for the year. I got my spidey sense that goes off when everybody says the same thing. And certainly, I didn't want to trade today. I wanted to see how things work. So I watched some Bloomberg and some CNBC for a while to see if that's exactly what was going to happen. I was going to hear the usual suspects that have been wrong for a while be wrong again, and why I kind of said that repeated the Jesse Livermore part about most PM being suckers. Can they hold this market up into the end of the year? Yeah, but it smacks a whole lot more to me of 1999, where everybody just wanted to sell. And of course, Warren Buffett is famous for saying that the stock market is kind of like Cinderella. She's gone to the ball. Everybody thinks they're going to sneak out right before it hits midnight, but there's no clock in the ballroom. We'll be back on Monday, bright and shiny. So when you can, not when you have to.
Building wealth trading in the stock market seems impossible to most